Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your European Session Morning Outlook. We'll start with the North American markets. The housing starts year on year from Canada came out 32.6 thousand better than expected. The NFIB Small Business Index for February fell 1 point to 92.9 with none of the 10 components posting a gain. Overall, no outcome confirming that the small business sector is not headed up with any strength, just trading water, waiting for a good reason to invest in the future, the NFIB said in the release. The indexes were again affected by the prices of oil, and mainly the Dow Jones went 8 points down, NASDAQ 33 points down, and the Dixie is at 97.38. The USD Canadian dollar is 130 pips up. It bounced from its trend line. And the USD JPY is 80 pips up. Today's events are important. Tier 1, Bank of Canada interest rate decision and statement. And from the US, a 10-year note auction event. EU markets. The euro underperformed in overnight trade. A singular catalyst was not readily apparent, suggesting the move may have reflected pre-positioning ahead of this week's much anticipated ECB policy announcement. The central bank is expected to cut the deposit rate by 10 basis points to negative 0.4% and may increase the size of monthly quantitative easing asset purchases. In the UK, we had the BRC retail sales monitor. 2.5% worse than expected at 0.1%. After Mark Carney announced that himself and the Bank of England are evaluating the risks of the UK leaving the EU and the effect that this may have on the City of London, the pound had its biggest downslide in 2 weeks versus the euro. The sterling also lost ground against the dollar. The FTSE 100 lost 55 points yesterday and closed at 6,139. The 10-year gilt yields closed at 1.48% yesterday. And the GBP JPY is 175 pips down yesterday with a 225 pips range. For today, we have the GDP estimate, industrial production month-on-month, year-on-year, and manufacturing production month-on-month and year-on-year from the UK. Alright, on to the Asian and Pacific markets. China's exports fell by most since 2009. This is one of the many signals that China is in a major economic slowdown. Of course, we all know this affects most of the other currencies and especially the Pacific counterparts. We'll be awaiting the interest rate decision by the Royal Bank of New Zealand tonight, as well as the monetary policy statement and speech from Bank Governor Wheeler. We'll be listening about his thoughts on China and the domestic economy. Alright, in commodities, at Early Asia, American Petroleum Institute reported crude stock piled up by 4.4 million barrels last week, higher than 3.1 million expected. Crude inventories nationwide are dangerously close to reaching full capacity after a considerable build of more than 10 million barrels over the final week of February. Overnight, crude futures retreated from near 2-month highs as Kuwait expressed resistance to a comprehensive deal among major producers to freeze output unless OPEC received cooperation from all of its 13 members, including Iran. Gold had a range of $18 at 1,257 now. Silver had a range of 40 cents at 15.30 now. Crude oil had $2.20 range at 36.65 going down. Natural gas is trading at 173 at the moment with a range of 5 cents. Alright, that was all for today, everybody. Thank you for the attention, and I'll see you next time. Goodbye.